as investment advice or a recommendation to buy shares in the company featured. Welcome to this StockBox interview. Welcome back to the Research Talks on a Friday, on a nice day, with Alan Green. Hi, Alan.
Hello, Mark. How are you?
Very good, thank you, Alan. And yourself?
Yes, very good, thanks. It's cold and frosty morning here in Seaford, but it's bright, which is always great. So looking forward to getting out and getting some fresh air later on, and just hoping we don't get too much rain and snow over the weekend.
Is it forecast, is it?
Yeah, we've got snow forecast on Sunday, which is haven't seen snow down here for a few years. We moved to Seaford in 2012, and it had quite some fairly heavy winters when we first moved down. But since then, we've seen very little of the white stuff. So perhaps on Sunday.
Well, maybe you will. Perhaps I haven't seen much snow here. We had last weekend. It was sort of a snowy thing, but it didn't really settle. So I've not seen snow for a few years anyway. Being in York, there wasn't much snow, but then lo and behold, this winter just gone, there was a lot of snow. My family were building snowmen outside, and I missed it all because obviously I wasn't there. But there we go.
Yeah, it's great, and I think at this time of year, it's great to have snow because that's what winter's all about. It kind of defines the seasons too, and I think whether it's global warming or other factors, sometimes we just get a year which seems to sort of go from a bit of blue to a bit of grey, and that's about it. There's not in between. So snow and cold is good.
Yeah, it is. Okay, well, so today we've got, you're going to be talking to us about Lexington Gold and Cadence Minerals.
Yes, indeed.
Yes.
I'll come on to Cadence next, of course. Okay. We spoke about Cadence. That was one of my tips for the year, and indeed the share price has moved. But I'm just going to go through some factors that I think investors will want to listen to and draw their own conclusions from. But yeah, Lexington Gold. Epic code is LEX, of course, listed on AIM. This is a company that was up to December known as Richland Resources, has changed its name on the back of project ownership in South Carolina. So the shares have traded as high as 4.2p on the year, as low as 0.67p. Currently, it's sitting at 3.8p, giving it a market capitalization of about 10 million. And that's a fairly modest valuation considering the assets that Lexington actually has under its control. So it has 51% ownership of 4 gold exploration projects in South Carolina. And as you'd expect in South Carolina, historically, South Carolina was the biggest gold producing state until California overtook it earlier in the 20th century. But nonetheless, all of the projects are based close to highways and energy and support services. So, of course, it's an environment and a state that is very pro mining and pro developing assets. So I'll go on to the individual projects in a second, but the 51% ownership is also the partner company is Uwari Resources, which owns 49%. It's a Carolina-based company, so it has unique and intimate knowledge of all of the assets that are now owned by Lexington, and indeed, around the region, there are some very, very high quality projects and gold prospects that have been developed in recent years that really gives rise and I think justifies the renewed interest and look at the area. So earlier in the noughties, a company called Ramaco in 2007 explored and developed the Haley gold property in South Carolina. Sold the company was sold and bought by Oceana Gold for $856 million in 2015. So that's sort of 5 years ago when really gold wasn't sort of at the sort of levels that it's at now. The history of Haley is interesting. It was discovered by Ben Haley in 1827. They attempted to mine the area, but the attempts were unsuccessful. The area is mined during the First World War for pyrite, which is used to make sulfuric acid. But it was only really when Ramarco got involved in 2007 using modern mining methods that the realization dawned that there was actually a lot more under the ground than perhaps had hitherto been realized. So I said Carolina was the biggest gold producing state until California overtook it. So the Haley mine has 4.5 million ounces underground. Then we have the Ridgeway mine, which is 1.5 million ounces, and that's owned by Rio Tinto. Then the Burrito Hill mine, which is 0.6 million ounces, and I'll come on to that again in a second. So there are four key prospects for Lexington. We have the Jones, Keystone, Laughlin. There are three prospects in South Carolina across these three prospects. Jones, Keystone, Laughlin. There are historical mines across two areas. Then there's the Jones Keystone project, which was sampling over the past few years revealed best grades of 5.5 grams per ton of gold. And then the Laughlin project, of which a best grade of 4.13 grams per ton of gold was discovered. Mm-hmm. We then have the Jennings Pioneer project, which was discovered in 1860, and this is I mentioned Barite Hill just now. This is located approximately 600 meters from the Barite Hill mine, and it's believed that the Jennings Pioneer prospect is a potential satellite deposit. And indeed, best grades from the region that have been sampled: 92 grams per ton of gold, which is very good indeed, and 1.342 grams per ton of silver. Also, the sampling 5.5% copper and just over 14% zinc. Mm-hmm. So very prospective territory there, and indeed that has been the primary point of focus for the Lexington team. In mid-December, the company announced it had undertaken a helicopter electromagnetic survey over the Jennings Pioneer project, where it's and the data from that is being processed, modeled, and interpreted, and is due for release in sometime in the next month or two. Interesting point to note here, it was the first time an electromagnetic survey conducted by helicopter had been conducted, and the company is also planning further fixed-wing surveys for the Jones, Keystone, and Laughlin projects, and the Carolina Bell and Argo projects that I'll come on to shortly. It's also Lexington's also confirmed drill-ready targets at the Jones, Keystone, Laughlin project as well. So number 3, we have Carolina Bell, which combines the Iola and Uwara historical mining areas. Iola, 45,000 ounces of gold was discovered there, and Uwara 5,000 ounces of gold, and grades were sort of averaging out about 10 grams per ton. Then we have the Argo project, which is drill ready. Best grades from previous soil sampling there, 12.65 grams per ton. And across the Argo project area, there are multiple historic pits over 380 acres. So we've got 4 really high quality projects here, gold projects in a mine that's in a region that's highly conducive to gold mining. The state are very supportive of mining projects, and I think the potential really is underlined by the Haley mine, of course, and the success that Ramarco achieved in developing it, and then of course selling it on to Oceana Gold, and of course there is the potential for any one of these mines, particularly given that the projects contain historical workings. A lot of those historical workings weren't successful in their era, but of course, applying modern mining techniques, going back with modern data mining techniques, desktop analysis, 3D modeling, magnetic surveys, all of those tools coming together can really transform the potential of what really have been hitherto dormant projects. Just a word on the board. The chairman of the board is Ed Nealon. He's got 46 years experience, founded Aquarius Platinum, which of course will be a well-known name to resource investors, and also was co-founder of Sylvania Platinum with Melissa Sturgis, who's also a non-exec on the board, again involved in Aquarius. She was a co-founder of Sylvania Platinum and has also worked with, she's also a director on Imperial X, and also Ananda, the Aquis listed company in the UK. The chief executive is Bernard Olivier, 13 years experience. He was a director at Tanzanite One, and also developed Besant Resources, their gold assets to a JORC estimate of 3.9 million ounces. And then finally we have Rod Grievous, who's a non-exec, again 30 years experience, managing director of Dioro Exploration, which is an ASX listed company, also a non-exec at Eldoro Resources, Andromeda Metals, and Golden Mile Resources. So a highly experienced team there with a high potential set of assets. And the great thing about Lexington, of course, it's literally just at ground zero. It's just started out, everything to play for. And I think given the history in the South Carolina region for gold mining, the upside here is really, really exciting.
Okay, and what was the market cap, Alan?
Well, the market cap currently is just 10 million. So, so if you divide that across the four projects, that's about 2.5 million each. And I think, as I say, there's a very good presentation on the website that goes into more detail. I've just basically gone over the key points, but I think take a look at the Haley mine. Haley spelled Haile. That really gives you, I think, real perspective on the potential in the region, and how a mine that had been in existence for well over 150 years was brought back to life by Ramarco using modern mining techniques, and that's the exciting thing. You can revisit a territory now that is considered barren and unworkable, applying modern mining techniques, and it's potentially transformational. So
we're seeing that a lot, aren't we? Like we've talked about Australia in the past, recently, in the new interest in the Victoria region, and again that was considered sort of spent, if you wanted a better word. But modern mining techniques have revealed that there's more gold. It's just at depth, and sort of these old sites are being rejuvenated, and fresh interest is coming. And of course, gold is the place to be at the moment.
Well, it really is. I mean, of course, we've spoken many times about the companies operating in the area, and I was watching an interview with Craig Brown, the chief executive of ECR, yesterday, and he was talking about the Fosterville mine, which of course is a producing mine in Victoria, and the Fosterville mine is producing something like 500 tons, 500 1,000 grams per annum of gold, and they've drilled deep to get it. But of course, the mine's there. It's one of the lowest cost producing mines. The ECR team now have their own drilling rig, and they're drilling deep on their own territory to look for the same geological anomalies that will hopefully sort of yield up further gold. But what Craig also said was that the average grade of gold that Fosterville processes through its mine is at 40 grams per ton. So you can get some idea of where the sweet spot is. If you're there or thereabouts at 40 grams per ton, then you've got stuff you can work with. So some of the grades there, I mentioned the Jennings Pioneer project, and of course they focused on that first because the best sample there was at 92 grams per ton. So it gives you some idea of what the benchmarks are that's required to then move the project on to the next stage.
Mm-hmm. Great. Okay. Well, thank you for that, Alan. So moving on, Cadence Minerals.
Right, Cadence Minerals. So I wanted to revisit Cadence again. I spoke about Cadence, of course, at the start of the year, and it was one of my tips for the year. I just think this company is still fundamentally undervalued, and I'm going to attempt to explain why in the next few minutes. So Cadence shares, as we speak, they're currently trading at just over 18 pence. They've been as high as 21p on the year and as low as just under 3p. That gives it a market cap of 27 million sterling. now the flagship project for Cadence, of course, is the Amapa iron ore project in Brazil. So I'm going to cover that quickly and just give a sense of what that project entails. But the really exciting thing, I think, is that the company, whilst it's being judged on a mapper, the value there isn't necessarily being reflected. But it's not just a mapper. Cadence has stakes elsewhere, which really cover, I think, they more than cover the existing market cap. So in that case, there is no premium in the share price at all for a mapper. So just to recap on Amapa quickly, it's an iron ore mine that was owned by Anglo American, and Anglo American valued the asset on their books, and this is an impaired valuation at $600 million in 2012. There was a port collapse. The Anglo sold it to Clough Mining, and then there was a port collapse, and the mine basically was let go, went into administration, and Cadence have bought the asset out of administration along with their partner Indosino, a Singapore-based company. They've had to go through a number of stages. They've had to undergo judicial review, bring the mine out of administration, also obtain permission from the Amapa state to restart the railway. And there's a railway that runs from the mine, runs to the Port of Santana, which is Amapa's own private port. That railway also served as a commercial railway in the past, so that could also be restarted too. The final step along the road is an agreement with the creditors. An agreement has now been reached. There are the legal documentation is being drafted, and once that agreement is signed by all parties, then $2.5 million is released out of escrow to pay the creditors. The tailings, there is some $60 million worth of iron ore tailings at the port. Those will be shipped, and the revenues from there will go to pay back some of the creditors and also towards the recommissioning cost of the mine. At that point, Cadence will own 20% of the assets, and there is a further $3.5 million to come. Being granted the company being granted the necessary environmental licenses required to operate the mine. At that point, a further $3.5 million will be released, and Cadence will own 27% of the Amapa mine. That could in future rise to 49% as well. Cadence has an option to increase to 49%. So as part of this work, a mineral resource estimate was undertaken by a team, and the original resource estimate was increased by 21% to 176 million tons indicated, and it's estimated that the mine, once it's back in production, will produce 5.3 million tons per annum for 14 years, and that's going to yield an EBITDA of some $140 million per annum. So you can see the asset there is absolutely huge, and once these steps go through to take it into production, I believe the share price will take off. But that's Amapa. So Cadence has a series of other investments. It owns 15% of European Metals Holdings. Now, EMH is the owner, along with the CZ Group, of the Sinovac Lithium and Tin project. The Sinovac Lithium project is the largest lithium resource in Europe. It's going to be a future hub for the EV and battery industry. And indeed, CZ Group, the part owner there, is looking at building a giga factory, or whatever they call them, basically a factory to manufacture the new batteries. So European Metals Holdings has a market cap currently of 101 million. So that makes Cadence's stake worth 15 million. And I'm just setting this against the current 27 million market cap. It also has an investment in Macarthur Minerals, which is an iron ore, which owns the Lake Giles Iron Project in Australia. And Macarthur Minerals has a takeoff agreement with Glencore that's worth some $4 billion over 10 years. Again, a market cap of 102 million. Cadence owns 2% of the company, so that's a further 2 million on top of that. So give or take, we're at about 16.5 million valuation against the current market cap of 27 million. We then have the Yangibana rare earths project in Australia. Now, there are a series, this is quite a large area, the Yangibana. It's in the Gascoyne region in Western Australia. There are a number of assets there with strange names such as Simon's Find, Bald Hill, Fraser's Trend, and then there's Yangibana and Yangibana North. Cadence has a joint venture with Hastings Technology Metals, which is a ASX-listed company, and it owns has a 30% stake in Yangibana and Yangibana North. So those assets haven't yet been developed, but it's estimated that there are some 2 million tons of total rare earth oxides across the asset there. So why is this of relevance? Hastings have been developing the asset. They have all the necessary environmental permissions now in place. They have a takeoff agreement with Schaeffler, which is a tier 1 German automotive company, Schaeffler Technologies, to supply their substantial volume of ore over an initial 10-year period. But Hastings announced yesterday that it was the drill results from the Bald Hill deposit, which is one of the key assets in the area, had both increased their understanding, improved the total rare earth oxide reading, and also extended the area that the oxides were found in. And the chief ops officer, Andrew Reid, said that he confirmed the unique geology at Yangibana could underpin a high-quality, long-life operation, demonstrating the potential scale and quality not just of Bald Hill but other Yangibana deposits. In addition, of course, when you're setting up an asset like this, you require tailings storage facilities, beneficiation plants, and all the key infrastructure to own and operate a mine. The infrastructure is sited closest to Bald Hill, and given the fact that the readings from there were so strong, that obviously will serve to further underscore and validate the investment in that territory. What it's worth, we don't know, but Hastings Technology Metals has a market cap of about 280 million Australian dollars. So there's obviously a lot of latent value within the Yangibana asset for Cadence. So we then come on to the Sonora Lithium project in Mexico. If you follow this project, you'll know that Macarthur Lithium are the operators of the Sonora Lithium project. The Sonora Lithium project. It's a huge asset, and it covers a wide area. Net present value of 125 billion US dollars for the whole region. But Cadence again is a 30% joint venture partner on the Fleur lease for the Mexilit project in the region. And again, there's a substantial amount of lithium or lithium carbonate under the ground there that is due to be mined. So if we put the Yangibana assets and we put these lithium assets together, I think that we add that to the European Metals Holding, European Metals Holdings 15%, and the Macarthur Minerals. I think we're at about 23 million. So that probably ascribes a value to a mapper of about 5 million, which, given the numbers that I've given you already, given the fact that we're expecting 5.3 million tons of iron ore produced there for the next 14 years, given that EBITDA is estimated to be in the region of $140 million per annum. That should put, in my opinion, a share price on many multiples of where we are now for Cadence. And I believe once the creditor agreement is signed and away, then we're going to see the share price move substantially higher.
Okay. I know you mentioned this before, Alan, in your top picks for 2021, and it's started the year quite well, hasn't it?
It has, yes. We saw the share price move above 20 pence, but I think when people are looking at the chart and saying, well, where's it going to go next? Just as an indication of the latent potential, in 2019, Macarthur Minerals announced the joint venture agreement with Glencore. And of course, at that stage, Cadence had a higher stake in Macarthur, but the share price bounced from about 14 to 15 pence. It bounced up to 42p intraday.
Wow.
I think when you're attempting to value a company and look at where the next likely points are, that was a value inflection point at that juncture, and I believe the next natural inflection point for the share price is back around that level. Whether it will there straight away, I don't know, but I think given the movement since the start of the new year and the developments, it's highly probable that we will see the share price continue to move toward that level. Also worth noting as well that there have been a lot of direct share purchases in the open market over the past few months. Kieran Mazaria, CEO, bought £30,000 worth of shares. Adrian Fairburn, non-exec, £30,000 worth of shares. Andrew Suckling, the chairman, bought £25,000 worth of shares, and Donald Strang also bought £25,000 worth of shares too. So big spending by the directors in the open market. That they firmly believe in the future of the company, and I think this company's got an awful long way to go.
Good. Okay, it's always great to see directors buying on the open market. That always gives a lot of confidence. So that's nice to see. Well, thank you very much, Alan. So we've covered Cadence Minerals and Lexington Gold. Thank you very much.
Thanks, Mark.
Great. Speak to you next week, Alan.
Speak next week. Cheers. Bye for now.
Thank you for listening to this StockBox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockBoxMedia.